Yo, what's up, players, ladies and gentlemen? Hope everybody's doing great, feeling fantastic. Welcome to our weekly outlook, also known as a weekly forecast. Whatever your wording choose it be, we are just here to give premises to structure of important price projections, looking at how we're going to formulate ourselves for the week, what we'll be targeting, how things will be looking like, where our potential, goals and targets that we're going to be reaching for the week. So the general purpose of a weekly outcome and a weekly outlook is essentially to plan and prepare for the upcoming week within the market, right? So with that being said, essentially it is just a general premises to set ourselves up. As they always say, preparation is the key to winning. You need to prepare, you need to come in ready if you want to expect to see yourself winning, because as we know, trading is the new high score. So for us to make sure that we are winning this week, we need to prep properly for it. So let's get into it. So we can't essentially do much without starting off without understanding what our roadmap looks like, right? And we need to first understand where you're going to expect injections of volatility in the market. We need to see it. We need to know when and what time. And how do we get into that roadmap? Number one, we first start off at Forex Factory. So that day is essentially where we will be projecting our upcoming week for price action and price delivery. All right. So let's get into all of that. All right. So the week starts off quite heavy on a Monday, as we do have a red folder. We do have manufacturing PMI on Monday at 10 a.m. So with that being said, it's going to be a good, start for the equities market. Definitely love these 10 a.m. news red folders. They give that expected volatility for, good price action essentially. Then come Tuesday, we then have a clear day on Tuesday, nothing on the USD side for Tuesday. Wednesday, we then have our ADP non-farm employment change. So don't confuse this with NFP. This is not NFP. This is the ADP, right? Then we also have later on PMI at 10 a.m. Then come Thursday, we have unemployment claims, also known as jobless claims. Then Friday, we also then have essentially our core price index, consumer sentiment, and inflation expectations. So that day is our general guidance roadmap for the week. With that now being said, essentially, now we know on which days to anticipate price to push and deliver us much more expediently towards, our premises of targets, right? So now that day has been discovered, so we know on which days we are going to be hitting. So we're going to be hitting hard essentially from Monday itself. All right. So now let's jump back into essentially now the premises of the chart itself. Right, great. Now, please do, number one, take core note of the fact that I'll be charting off a futures market chart. So this is relatively NQ from the futures market. So essentially I chart off from the futures market because I trade futures. So the pricing might be slightly different towards the Forex chart on your NASDAQ chart, right? So NQ obviously is the symbol for NASDAQ, but then on the futures we call it NQ. And then obviously on Forex is called NASDAQ, right? So just make sure that when you're doing your price references and your price points, you are similarly looking at to the same area. So futures obviously way better, way smoother, much more greater, clean pricing, real-time pricing from the CME, no slippages, no spreads, just trading futures is better. Let me just say, your orders get filled in, you get cleaner price action, you get real price data, real-time data, not lag data from brokerage firms on CFDs. But then that's a chat for another video, another time. We'll get into the difference between futures trading and forex trading and all of these type of things, prop firms, brokers, and all of that. We'll get into some of those. So My charting, like I said, will be on the futures chart. So just be mindful of the price points I'll be speaking about, because it definitely will not be exactly as it is on the Forex or Nasdaq chart, right? So number one, come the new week, we are going to be starting off a new monthly candle, right? So this is going to be then the previous monthly candle. So this will be the November monthly candle. I'm currently on a monthly time frame, right? So this will be the previous monthly candle. So now this will then determine or dictate our dealing range. So now we get to mark out firstly what our dealing range for the month will be, right? So if we similarly tap into that, there we have our previous monthly high. So that will be our previous monthly high right there. Then we have essentially our previous monthly low. So we have our previous monthly low. Just write out the previous monthly low. So now we have a dealing range depicted. So we do know which areas we can play in price, because we have now created a dealing range for ourselves, right? So the dealing range will be between the previous monthly high and previous monthly low. So with also that essentially now being said, we need to find where the premium prices are versus where the discount prices are of this range. So to do that, we need to be able to split our dealing range into a equal half. So to just easily do that, you can just use the rectangular tool, and then by so doing, then we know midway point right there would essentially then be our 50% zone. Just tint that out as a black, make that slightly lower, dashed out. So we do know below here we have discounted prices, then above here we have our premium prices. So this is essentially a dealing range, right? So now to make this dealing range more effectively for us, we need to understand where price is coming from and where price is going. So we are able to make projected speculation towards how we want to be trading the market in the upcoming week, right? Then just above that we have essentially the all-time high right there. So that there is our all-time high. Which is at 26,391 is the all-time high. What is the high of this candlestick? 399 actually. It's 399. Let me just actually switch on my magnet so I can get the correct pricing. There, 399. Then our high right there is 26,226. Then our monthly low is 23,904. So now our primary focus is essentially our dealing range. So remember, this is the 50% zone here, right? So this is what splits everything between premium and discount. So now we know we have a dealing range on a higher time frame. So we'll be looking to play price essentially in this retrospect right here. Now let's move slightly lower for more context. So now on a weekly time frame, number one, we get to see and note the following, right? Number one, the PD arrays of price that we are in and the PD arrays of price we're going to deliver into. So at first sight, we get to see number one, we have essentially a volume imbalance of price right there. we have a volume imbalance of price, so that will be the volume imbalance high. So that will be our volume imbalance high right there. Then this would be the volume imbalance low. Right there. So we see price essentially delivered low to a volume imbalance of price that was essentially going high. We had a price delivery low, second delivery back into it, but then with a body candle close below it. So we haven't had delivered towards the upside that closes the volume imbalance, moving price towards the high, right? So that there is first PD array we get to notice that needs to be filled in. Then secondly, we get to see we have a previous weekly high right here. We have a previous weekly high sitting right there. So with this is now premises essentially of buy side liquidity. So now this is a previous weekly high, and this would make for our external buy side liquidity. So this is external buy side liquidity for us. We have a volume imbalance. We come from a discounted price. We've had sell side liquidity here taken right there. We had sell side liquidity taken right there. So our expectation would be for buy side liquidity to be taken. So we had external sell side liquidity taken. Now we have buy side external liquidity waiting there. We're coming from a discounted area of pricing. We have a PD array that needs to be filled in, and we have external liquidity as well pending at the top, right? So if we dump down to get more detailing, more information, the chart now starts looking like this. We start seeing something of structure, we start seeing something of relevance right now. So number one, if we look into this here on a daily chart, we have a CB of price. However, we have an up close candle within the CB of price. So should price open above this, then would consider this now as an inverse or an inversion fair value gap. So this would be essentially our IFG, which is a daily inversion fair value gap, meaning price would then essentially inverse to deliver higher from it. So to confirm the inversion of it, we would need to see an upper body candle close above this to deliver into that volume imbalance and that expected external buy side from the previous week, which is essentially what I'll be premisely looking to target for the upcoming week, right? So my forecast is essentially for price to move to a higher region. Not yet looking for short pricing, I'm looking for high pricing. Yet again, to stamp on, if you look into this area here, we have essentially now a fair value gap that offers buy side right there, which is going to be a busy. So obviously when market opens, there will be a new candlestick, thus completing our 3 candlestick drive pattern known as a fair value gap. This is a busy, and a busy is a fair value gap we know which offers essential buy side opportunity. So this will be essentially a busy. So how I'd look for price to then essentially move would be in the following format, either directly from here straight to there are buy side liquidity or something of this nature where it uses the BSI as a support, then takes it from that area to the buy side external liquidity there. However, my premises and my focus is buy side. I am looking to essentially be long in the market in the upcoming week. Longs for me make more sense. Longs for me essentially make premises, and based on the fact that we do have the fundamental events that are upcoming, we should see price deliver towards it, right? However, the shorting for me would begin once I have all the premises of that taken. Once all of these have been cleared up, then I'd start seeing and finding reason to go short. And my number one essential reason why I'd want to go short would then be right here. We do have a CB now. So this is an imbalance that then now offers sell side, right? So this is now a CB. With that now essentially being said, once price then hits, clears up liquidity, hits a fair value gap that offers sell side, then I'd want to see price start to drop. Then I'd start looking for selling opportunities. However, remember, we cannot predict the market 100%. So we plan and react of what we get. Should price fail to continue going higher, then I'd know the premises of how to now look for shorts and enter for shorts in the market. Firstly, number one, I'd want to see this BSI fail. Once this BSI fails and this BSI now becomes an inversion holding this one as one that offers sell side, once that fails, then I'd start looking for shorts in the market. Because number one would be then in an expected premium price, then we'd be offering price to move into a discounted area. So even if you pull your Fibonacci from our range high to our range low right there, you get to see essentially that there is a sweet spot for us, the 79, right? So it would have cleared up essentially from all-time high to that low right there. Just also one more context of getting clearer from that area, I did see still clears up to the sweet spot, but then you need to pull your fib from your high to your low so you can get proper pricing. That there is a sweet spot number for us. For those that know an OTE, that there is an OTE entry, so optimal trade entry pedal that you can use right there, right? So for me, why I say high prices for the upcoming week to this particular area makes more sense, because I honestly don't see the all-time high being taken in this course of the month. Simply number one, because of the December season, meaning that we're gonna have economy slowly shut down because it is the festive season, right? So you're gonna have more of the holiday season. Like last week we came from a US bank holiday, the following day after that was Thanksgiving. So all of these where the market closed half day on Friday. So these are some of the premises that will start slowing down the market because we are now moving into the festive season. Less economic activity happening, less work. Similarly as it happens also in South Africa, festive season, we know we have our company shutdowns or whatever until come January, until the new quarter. So I don't see them coming for the all-time high as yet for the course of December. I wouldn't put my cards on an all-time high being taken. However, I'd want to see them use that day as the defensive mechanism to drop price lower back into the discounted area, because we do have essentially unfilled premises. We do have this volume imbalance sitting right here. As you can see, do have this volume imbalance sitting right here that needs to also be filled in. So for me to essentially dive into shorts, I'd want to essentially see buy side liquidity cleared up. Once buy side liquidity is cleared up, tap into the CB, hit halfway mark of it. Once it hits the halfway mark of it, closes below the halfway mark of it, for me that there is premises of price essentially going down. All right, then I'd start looking for shorts once that has been done. But then my primary focus for the upcoming move for this week would be essentially for prices to move up. So if it opens up, goes lower, then I know exactly how to play about it, because then would have every candlestick an open, high, low, and close. Meaning the opening would be the accumulation area where price essentially will be opening from the Sunday open, then head into this busy, which would be then the leg of manipulation, then distribute to essentially where it needs to. So that will be our AMD cycle, right? So we can form premises of finding up a market maker buy model essence towards it. So it's all about understanding, number one, where your PDRAs are, right? And marking out all the importance of it. So number one as well, it's not just about the pricing, it's also about the time as well, because that is important. It's time, then price. Once you find time and price, you will definitely find profitability in the markets. So understanding at what time this plays in your specific PDRAs is what essentially will make the difference of your particular entries and so forth. But then those are some of the things we want to be going through essentially in the live sections, right? So when we are now essentially looking at price in live movement, as now this segment, it is a weekend, so we will then obviously be trading the live market essentially in the lives. Then we obviously now get to see price essentially move in live data and live nation. Then Pesquai, we get on top of it, right? So that day will essentially be the premise. So this is how I usually gear up for my week before getting this. So I need to prep up for it. I need to see my value points. I need to see what points of interest do I have, where my PDR is lying, where do I want to find myself in targets, which are my external targets, which are my internal targets, that's forth, right? So in retrospect, that's essentially my weekly overview, weekly outcome of how price is going to be in the forthcoming, right? Because like I said, for me, there's too many things screaming, let's go to the top, which is essentially gathering all that. Then from there, there's a reason for me to say, okay, now we have what we needed. Now let's look for price to deliver to the downside, right? Because even if we step into even a 4-hour time frame, we should start seeing price clear up more and look much more cleaner. See, all of that there, we essentially have that liquidity sitting right there, that busy there. As mentioned, we have two relative equal highs right here. On the H4 time frame, we have two relative equal highs sitting right there. Structure moving upwards, delivery from price lower, hitting fair value gaps that are often buy side. Using this as a breaker as well, because we have price going up, down, created a high, created a low, comes back, stands on top of this. So now we essentially have a breaker right here. So we do have an H4 bullish breaker right there. So we could see them hit it yet again to use the breaker area right here, hit it down there, then rally it higher. So depending on what time we are in this particular PDRA, that's where you would obviously be more focused. If you are in this in specific macro times, then we know what the deliver will be, right? But then those are some of the things that usually come to life when we are in live conditions. So you cannot predict the macro times right now, but then come live trading and we are in this particular PDRs at specific times, then we know certain outcomes of what those particular macros will do, what PDRs will act like, and what they should be doing, right? But then, like I said, my core and main focus is essentially for price to move up, probably start me over there, create the low of the week in this area, then price me higher. That there is how I'd be looking for premises for the week. Let's just get into a 1 hour chart. Let's see how it's looking like, slightly beginning to look more cleaner. We do have liquidity sitting there essentially in that volume imbalance. So remember those orange dotted lines, the 25,723 and 25,494, that there's our volume imbalance. Delivery towards the upside, like I said, hit the upside, then we start projecting to look lower, because we do have that volume imbalance that I had mentioned in that higher time frame, which sits right there. Sell side liquidity also pending, so we will be building up a trend line liquidity, which will then be able to deliver. Then we'll have our market maker buy model, look at all the relative highs sitting here, all the relative liquidity sitting just there, relative high right there. So these are points of reference that for me make more sense for me to look for longer position towards the come beginning of essentially the week, right? And then obviously as the week unfolds, then we'll start looking at more projections. So with that essentially being said, ladies and gentlemen, we have essentially looked at the outcome. We have structured our week. So this is how I'm gonna be going forth in the upcoming week. We'll have the same markings, obviously, then have the most important markings also lined up, which will be the Sunday opening time, which will be 5:30 or essentially in Eastern time, rather, let me put it in that manner. Mark up your Sunday opening price, mark up your midnight opening price as well, all New York settings. My chart is forever set up to UTC -5. Obviously now because of daylight savings, if there isn't daylight savings, then we have UTC -4. So those are the time references I'll forever be using, and those are the time references I always speak to because it is about the Eastern time. Then obviously in terms of the trading times is the equities market, which will be 9:30, which will be in South African time 4:30 p.m. in the afternoon. That's where essentially the equities open, and we'll have our live sessions coming through right there. But then in projections for the upcoming week, this is essentially how I'm viewing it and breaking it down. So it's always about preparation. So you have the weekend to start prepping up for yourself, go through, your journal, look at your previous week, look at your performance, gear up for the upcoming week, get ready for it, and just start blending in, because it's all about mental work. It's all about the work behind the charts. It's all about the things you do before you step into the market. So with that being said, folks, take care and enjoy the rest of your weekend. And then essentially we'll then hop up in the upcoming week. And then in terms of my trading, always strictly equities. The equities market is what I trade, so specifically Nasdaq as the primary, and then the S&P 500 as the secondary. So I'll also just be doing markings up on the S&P 500, so I don't want to make this a very long video. So now we'll stick it to Nasdaq as the primary, but then obviously we'll have S&P as just further more confirmation on our end, and would be using S&P as more as an indicator as well towards our entry parameters and prices, with things like the SMTs, looking at essentially how it's behaving, which one is stronger on the day, which one to particularly look and take into. So with that being said, then take care, enjoy the rest of the weekend till our next one. Signing out. Let's go, players.